bubbles can be great. But not when it comes to housing. A new report from Bloomberg Economics highlights the world's bubbliest markets. And chances are you live in one of them. Trouble is, the more bubbly the housing market, the greater the risk of a massive fall. Is this going to lead to one of the biggest housing market crashes we've ever seen? I'm Biko Konstantinos, and that's what we're going to talk about today. I'd love it if you could crack a like on this video, and I'd love it even more if you could subscribe to my channel. I'm your friendly Aussie financial commentator and educator. Now let's see if all this housing froth is going to lead to big trouble ahead. We're going to focus on this BNN Bloomberg article, which is highlighting the warning signs for the world's bubbliest markets. Now we've got a world economy that's already grappling with raging inflation, stock market turmoil, and a grueling war in the Ukraine. Will the unraveling of the artificially inflated housing boom send the global economy off the edge of a cliff? As interest rates and mortgage rates soar, a great number of home buyers just can't afford the super high levels that sellers are asking for. So the housing markets in countries like Canada, US, New Zealand and Australia have suddenly turned cold. We've seen an extremely sharp reversal from the ultra cheap and easy money that fueled the housing boom during COVID. Now there was plenty of opportunities for central banks to start moving earlier on interest rate rises because it was very obvious that wild speculation was driving up housing prices to ridiculous levels. However, they failed to act in a timely manner in my opinion, which resulted in this global housing boom which has now resulted in a global housing crisis. Housing affordability to buy a home is at ridiculous levels, and this is flowing into the rental market where we're now seeing a major rental crisis. So by trying to protect the economy during COVID, did governments go too far with cheap and easy money where now we have a major societal crisis that could see many become homeless? Let's look at this Bloomberg Economics analysis, which shows that 19 OECD countries have combined price to rent and home price to income ratios higher today than they were ahead of the 2008 financial crisis, which should be flashing some major warnings. This is the table which analyzes housing metrics over 30 developed nations. I'm going to hone in on the top 7 which have been rated the most bubbliest or the most at risk of a major correction. To come up with these rankings, the report looked at house prices compared to rent, house prices compared to income, how much house prices have grown, both in real terms, which is adjusted for inflation and nominal growth, as well as the nation's growth in credit. Averaging the scores, we can see our top 7 most bubbliest housing markets. We've got New Zealand as the absolute worst, followed by Czech Republic, Hungary, Australia, Canada, Portugal, and the USA. Now, if you live in one of those countries, let me know what your experience has been regarding the housing market. I'd love to hear your local perspective of the housing boom and whether things are starting to change. For all these nations, housing affordability is becoming a crisis. Many of these nations are seeking to tame frothy house prices because they need to try and curb soaring inflation. But their dilemma is if housing was to crash, the economy could face a severe recession. Falling house prices would significantly erode household wealth. And if you combine this with what's happened in the stock market and crypto, a great deal of fear will enter the entire market, which will lead to a recession in my opinion. The head of global markets research at Nomura Holdings said, "A decade of quantitative easing has fueled frothy housing markets, but this could now be all over as housing affordability is stretched and debt service ratios are rising very, very sharply." And I tend to agree. We've seen ultra loose monetary policies, which include super low interest rates, a massive amount of market intervention and stimulus, that we encourage huge speculative leverage bets on housing, stock market, and pretty much anything else. So it's like we've artificially created these bubbles, but that era could now be over, and so could the bubbles. We've already seen crypto crash. We're starting to see the stock market crash. Will housing be next? Lower house prices will have an extremely large effect on the economy, as real estate makes up a huge part of household wealth, especially in these top 7 most bubbliest housing markets. Because there's a current global tightening of monetary policy, there's increased risk of a sharp drop in house prices, according to Niraj Shah of Bloomberg Economics. Just in the last month, we've seen a number of countries raise their interest rates by 50 basis points, and the US raised them by 75 basis points, which is the highest rate hikes we've seen in many years. Housing markets in New Zealand, Czech Republic, Australia, and Canada rank among the world's most bubbliest, and as a result, most vulnerable to falling prices. The rapid deterioration of affordability and large drops in home sales suggest that a hard landing for the housing market is a very meaningful risk, especially for New Zealand, Canada, and Australia. Central banks are also issuing warnings, with the Bank of Canada concerned about the high levels of mortgage debt, which will strain more and more borrowers as interest rates rise. And New Zealand's financial stability report suggested a sharp decline in house prices was possible, and this could significantly reduce wealth and lead to a contraction in consumer spending, in other words, a recession. As borrowing costs rise, real estate markets face a critical test, Bloomberg Shah said. If central banks act too aggressively, they could sow the seeds of the next crisis. But there's no easy path for central banks ahead. We've gone too far down the cheap and easy money road, and now inflation is soaring. So as interest rates rise, the artificial bubbles are starting to deflate and crash, and that will inevitably lead to recessions. However, central banks may not be able to just reduce interest rates so easy this time because inflation could remain high for extended periods. So there's no easy fix that's going to just provide a super soft landing for all global economies. In my opinion, I think we've been too loose with monetary policy for far too long, and now we're paying the consequences for that. So what do you think? Do you think these most bubbliest housing markets are destined for a sharp housing crash? And because house prices in these countries rose the highest, do you think there'll be more pain on the way down because people had to borrow so much to get into the market? Or do you think all this concern is just unwarranted because housing is a great hedge against inflation, so should see continued strong demand? I'd love to know what you think. Either way, I think it's going to be a volatile ride for global economies over the next 12 to 24 months. Hey, you've made it this far, so you might as well subscribe to my channel. You know I'd love to have you so we could make each other better. Whatever the housing market is where you live, I wish you all the very best. I'm Biko Konstantinos, and I'll catch you in my next video.